Hello everyone, it's Stephen Cooley with Stephen Cooley Real Estate. Let's talk about interest rates. We all know that interest rates are higher than a couple of years ago, making mortgage payments higher too. Higher mortgage payments are not a good thing for borrowers who are buying homes, but I do want to point out a few positive things that come with higher mortgage rates, and I guess I'm trying to make lemonade out of the lemons we've been handed with higher mortgage rates. Number one, higher mortgage rates only affect the folks who are getting new mortgages. Cash buyers and the people who bought a home in the past and locked in low rates are not affected. If you locked in a rate in the past, your payment is not changing. Number two, most of us save money and banks are now paying 4 to 5 times higher interest rate on our savings accounts, money market accounts, and CDs. Since banks are charging more money to lend, they're also paying more money when you deposit money in their banks. This can benefit everyone in America who saves money. This money at the banks is oftentimes insured, and the stock market is not insured. The third positive thing about higher mortgage rates, if you are out there buying a home, there are less buyers competing to win that property. Just a few years ago, we would get up to 50 offers on a home. So that's been reduced by these higher mortgage rates, and now there may only be 1 to 3 buyers competing for that house, still better than competing with 50 other buyers. The results are not having to overpay, the home being on the market a little longer, which could allow you to shop the home or maybe even go see the home twice and get better terms in the contract when you make that purchase. Number 4, rates can still be bought down to the old rates. You do have to pay up front for this buy down. Oftentimes these buy downs are still less expensive than having to overpay for the house that you're trying to win. Number 5 benefit to higher rates. Rates are not forever. Hopefully you will only have to pay these higher rates for the short term, and when rates drop, you can refinance for little to no money when you do that refinance. When you overpay, you've locked into overpaying forever. Number 6, when rates are higher, the amount of interest paid to the bank is higher, which allows you a higher tax deduction on your income taxes. We've all heard of people buying a home for those income tax deductions. Well, that's a bigger deduction when rates are higher. And number 7, finally remember that mortgage rates are still low compared to the late 1980s when rates hit over 20%. Mortgage rates are still the best rates out there compared to credit card rates and other loan payments. Again, I'm doing my best to look at the bright side of the current rate situation and hopefully make you feel better about the current mortgage rates. If you're interested in buying or selling real estate, reach out to the professionals at Stephen Cooley Real Estate and we'll give you great real estate advice.